Hey, what's up? It's Ben here. A couple of weeks ago, I bought 5 tech companies. Then the next couple of days, the entire stock market decided to sell off. No one can have predicted that, and things like that happens all the time. This is the reason why you don't want to invest all your money at once, and if you can't afford to lose the money in the short term, don't invest at all because your emotions will get the best of you when you see your stocks are dropping every single day. So in today's video, I'm going to be giving you all an updated view of my dividend portfolio, which is mostly kept inside a Roth IRA on Webull, and also give you an updated view on my growth portfolio, which is just my individual account on Webull as well. Then I'll go over some of my plays that I'll possibly execute in the future if everything goes accordingly to plan. And of course, I'm not a financial advisor, so please don't take this as investment advice. Just watch this as some sort of entertainment for you and how I intend to suffer if the entire stock market decides to crash again. So first things first, let's talk about my dividend portfolio. So instead of individually saying what I own, here's currently what it looks like. All of them are paying out dividends except for Tortoise Acquisition, ticker symbol SHLL. The reason why I bought this inside my Roth IRA is because I'm planning to sell it later on in the future after the merger with Zyllion. If you haven't been keeping up with them, they just announced a special meeting on September 28th to approve the pending merger. So we gotta see how it's going to play out with their stock price. This is a speculative play. If it pops, then I'll be able to profit a few extra dollars and without being taxed on it. Currently, just looking at my portfolio, I'm up $745.25. But it's not all rainbows and sunshine over here. I have losers too, and 2 of my current biggest losers are Walgreens and ExxonMobil. The one that I'm really worried about is ExxonMobil. These are my 2 reasons why. First, they are burning a lot of cash. Their dividend yield is above a 9% right now, and if this pandemic continues to dampen traveling or the use of oil continues to decrease, in December, they may start cutting their dividend. There is a good chance that they will cut their dividends for the next year if this pandemic continues to drag on for 2021. Currently, their dividend safety score is at a 55, which is borderline safe, and I'm not too sure if they can last 1 full year with this. And if there's a cut in their dividends, you'll see a huge drop in their stock price, plus they're known to be a dividend aristocrat, so if it happens, it'll for sure rock the stock price. Secondly, it doesn't really align with my strategy. If you're curious of what my strategy is, feel free to check out my dividend growth strategy listed down below. I'm basically looking for stocks that's listed on the Dow Jones, but since they got removed from there, I'm a little hesitant to keep it. I probably should have cut it and take a small loss on it because I don't have a huge position in it, so I'll let it ride for a couple months and see how things will play out. I didn't expect this pandemic to last this long a couple months ago when I bought it, and of course you can't predict the future, but you can rely on the track record. And looking at their performance back then, it was pretty stable. Now things are constantly changing, so stick around if you want to know what I'll be doing with that company. Now as for Walgreens, they still have cash on hand, so I'm not too worried about this one like ExxonMobil. Their dividend safety score is a 79, so they're considered safe and won't be cutting their dividends anytime soon. Plus, they just recently increased their dividends during a pandemic, so if the price of this stock continues to drop over 10% of my current position, I'll just buy more. But in my Roth account, I only have about $600 left, so I'll have to wait until 2021 to refill it back up again with more money. So now let's look at my individual account. Currently, this is what I have. 2 of my major losers are Square and Apple right now. The reasons why I'm pointing all my big losers out is because I want to show you that stocks do go up and down. If I'm only showing you the gains, then it'll just create a perception in your mind that stocks only go up. But if you do some research and willing to wait it out for the long term, then it might be rewarding. So that's why it's important to invest in the long term and not for the short term gains. And by the way, I do average down on my losing positions on stocks, so I'll continue to buy given the fact that none of this internal situation has any major changes. For example, when Apple dropped to $120, I went and bought more shares of that. Then it continued to drop to $114. I continue buying more shares of that as well. Remember how I said not to use all your money to buy a stock because things like this can happen, and if you don't have more buying power, you won't be able to go in and scoop up some cheap deals. And if you're curious, I did buy more Square stocks at $151 and at $144. If it goes below $140, I'll get more. As for Apple, it'll be a good time to buy more if it drops below $100 per share, so I'm still waiting it out to see what it does. So hope you all like this transparent update on my portfolio. I have nothing to hide here. If so, feel free to give it a like, and if you're interested to see what I'll be buying and selling or talking about other companies in general, feel free to subscribe as well. I'll catch you all later.